Welcome to the Deep Dive. You've handed us a really fascinating collection of sources today, all focused on Baidu.
Yeah, the Chinese tech giant. Lots happening there, especially with AI and autonomous driving.
Exactly. So our goal here is to, cut through the noise. We want to distill the key insights from these analyst reports, forecasts, all of it.
And really understand what makes Baidu tick right now, where they're headed, why everyone's watching them so closely.
Right. We want you to walk away feeling genuinely well-informed about Baidu's strategic place in this global AI race.
Okay, let's get into it. First off, it's clear Baidu isn't just like dipping its toes in AI.
No, it feels much bigger than that.
Totally. They're actively redefining their whole identity around it, making this really decisive shift, positioning themselves as an AI-first business.
AI first, and you say that's not just talk.
No, it's backed by pretty substantial investments in core AI technologies. They're putting their money where their mouth is.
Okay, so that commitment, that AI first idea, let's see how it shows up in the numbers. Their Q1 2025 financials are interesting.
They are. What jumps up first?
Well, adjusted earnings per share, EPS, came in at $2.55. That actually beat the Zacks consensus estimate pretty handily, right? Over 30% higher than the $1.96 expected.
And revenues, too.
Yep. Total revenues hit $4.47 billion, also beating the $4.3 billion consensus. So on the face of it, looks solid.
On the surface, yeah, it looks good. But, when you dig a bit deeper, the picture gets a little more, let's say, nuanced.
How so?
Well, while those revenues grew 3% year over year, which is okay, their adjusted EPS actually declined 7% from the same time last year.
Declined. Okay, that's different.
Yeah, and adjusted operating income down a pretty significant 20% year over year.
20%? Wow.
And that means their adjusted operating margin shrank by 500 basis points, or 5 full percentage points. It's down to 16%.
A 5-point margin contraction is definitely something to notice. Is that just the cost of this heavy AI investment, or something else going on?
It could be partly investment costs, but there's also rising SG&A selling, general, and administrative expenses.
Oh, okay. How much did those go up?
Up 10% year over year to about $815 million. The sources say that's mainly due to channel spending and promotional marketing, so pushing products.
Right, pushing those AI products into the market. But here's a question. R&D expenses were actually down 15%. How does that fit with an AI-first strategy?
That's a good catch. It suggests maybe a strategic shift within their spending, perhaps less foundational research, more focus on commercializing what they have, or maybe just optimizing that R&D spend.
Okay. It's not necessarily a red flag then.
Not necessarily on its own. And despite these costs and shifts, they still have a solid cash position, about $6.81 billion in cash and equivalents as of the end of March 2025.
So they have resources.
Oh.
All right, let's talk about a core part of that AI transformation, their AI cloud engine. This looks like a real bright spot.
Oh, definitely. It surged 42% year over year, huge growth.
42%. And what was the revenue figure?
Generated RMB 9.4 billion, which is roughly 1.3 billion US dollars just in Q1 2025.
That's substantial. What's driving that kind of growth?
The market seems to be recognizing their distinctive strength, as one source put it. They offer these full-stack AI products.
Meaning hardware and software, the whole package.
Exactly. The whole stack from infrastructure to models. And apparently they offer it with a highly competitive price-performance advantage.
So value for money, basically. And they've been building out the tools too, right? Like MAS?
Yes. Their model-as-a-service platform, KeonFan, they've expanded its model library. MAS makes it easier for others to build on Baidu's AI.
And new models too. Ernie.
Right. They launched Ernie 4.5. That's their first big multimodal model. Handles text, images, audio, you name it.
Multimodal is key these days.
Definitely. And Ernie X1, their first reasoning model, designed for more complex logical tasks. That was back in March 2025.
Okay. And they've already updated them.
Yep. Revamped turbo versions came out in April. Plus, their deep learning framework, Paddle, hit version 3.0. So lots of activity.
It sounds like they're building a serious ecosystem there. And what about their traditional user base, the Baidu app?
Still huge. Monthly active users, MAUs, reached 724 million in March 2025.
724 million, and that's growing.
Yeah, up 7% year over year. That's an enormous user base that could potentially be leveraged for all these new AI features.
Right, it's a massive built-in audience or data source or both.
Exactly. It's a crucial foundation, not just for the app itself, but for their broader AI ambitions, which naturally leads us to autonomous driving.
Right, Apollo Go. This is another area where Baidu seems to be hitting some major milestones.
Absolutely. They reached 11 million cumulative rides by early 2025.
11 million. I saw that figure. Didn't that edge out Waymo?
It did. Waymo had reported 10 million around that time, so Baidu pulled ahead, at least by that cumulative metric.
In the recent pace.
Very strong. In Q1 2025 alone, Apollo Go provided over 1.4 million rides.
1.4 million in just 3 months.
Yeah, that's a 75% jump compared to Q1 the previous year, and they've racked up over 150 million kilometers of autonomous driving experience overall.
That experience is crucial for refining the tech.
Totally. It underscores their technical and operational maturity. This stuff is hard.
Now, one of the most fascinating parts, I think, is their strategy for scaling this up. It's different from Waymo, isn't it?
Very different. Baidu uses what they call an asset-light model.
Asset light. Okay, what does that mean in practice?
It means they partner with local mobility providers, taxi companies, fleet operators, that kind of thing.
Ah, so they don't own and operate all the cars themselves.
Exactly. This minimizes their upfront capital costs hugely. Think about how much it costs to buy and maintain thousands of specialized vehicles.
Right, it's massive, so they avoid that bottleneck.
Precisely. It allows them to scale faster, theoretically, without that huge capital outlay. It's a big contrast to, say, Tesla's approach with Cybercab.
Which is very vertically integrated, proprietary hardware, the works.
Right. Baidu offloads some of that capital intensity onto partners.
That sounds smart for rapid expansion, especially globally. But does it create other issues? Like, do they lose some control?
That's the potential trade-off, yeah. Relying on partners means shared control, maybe dependency. But the sources suggest Baidu maintains pretty strict technical oversight.
They provide the core AI driving system, the brains.
Exactly. So they keep control of the core IP and performance standards. And their global plans are definitely ambitious.
Where are they looking? I saw Dubai and Abu Dhabi mentioned.
Yep. Launched there in March 2025. And they're apparently setting their sights on Singapore, Malaysia, even Switzerland.
Interesting mix. And the vehicle itself, the RT6. It's relatively cheap, isn't it?
Yeah, priced under $30,000, which is a big cost advantage compared to many other robotaxi platforms.
And crucially, they adapted it for right-hand drive.
That's a huge deal. It opens up massive markets, UK, Australia, Japan, much of Southeast Asia. That's about a third of global traffic right there.
Wow, didn't realize it was that much.
Yeah.
And are the regulators helping or hindering in these new markets?
Well, in Southeast Asia particularly, it sounds like they're getting regulatory tailwinds. Governments in places like Singapore and Malaysia are reportedly quite eager to adopt autonomous tech
Why is that?
to help reduce traffic congestion and emissions. So it creates a more receptive environment for Baidu compared to, say, the sometimes slower pace of regulatory approvals in the U.S.
Gives them a bit of an edge, potentially. Okay, so the strategy seems sound, the tech is maturing, but there are always risks, right? Especially in cutting-edge fields.
Oh, absolutely. Investors need to consider those. There are technical challenges driving in complex new cities, like Singapore won't be easy. Delays are possible.
And competition isn't standing still.
Definitely not. You've got Waymo, Tesla ramping up their global plans too. Plus, potential resistance from local players in these new markets Baidu is entering.
And we talked about the partnership model relying on others could dilute control, as you mentioned.
Right. And financially, there are specific risks, too. We saw that online advertising revenue actually fell 6% year over year in Q1.
Ah, yes, the core search business. That's still significant for them.
It is. And those short-term margin pressures from the heavy AI investments we discussed earlier are real.
It seems like maybe Baidu isn't a stock for short-term traders then. One source noted poor performance around earnings announcements historically.
Yeah, that reinforces the idea that this is likely a long-term play. You have to believe in the AI and autonomous driving vision unfolding over years.
So what's the core investment thesis here, boiling it down?
It really rests on Baidu's sector leadership, especially in China and potentially these new markets.
Plus the cost-efficient scaling from that asset-light model.
And their strategic market access, like getting into right-hand drive markets early. They're seen as a first mover in key geographies, leveraging that Apollo platform, which is also partly open source.
And the valuation looks attractive compared to peers.
That's a key point. Trading around 15 times forward earnings, or PE. Compare that to Alphabet, Google's parent, at maybe 28 times PE. It suggests Baidu might be undervalued.
Especially given the size of the potential markets. Autonomous vehicles projected at, what, $170 billion by 2033?
$170.57 billion, yeah. And the AI cloud sector around $200 billion. Huge numbers. Baidu is definitely angling for a big piece of that future pie.
Okay, let's widen the lens now and think about Baidu specifically within China. Their position there seems almost entrenched.
It really does. Baidu has become a linchpin in China's own AI-driven digital revolution, especially where global players, like Google, just can't compete effectively.
Because of regulations and market access issues.
Exactly. Baidu benefits significantly from what the sources call China's tech sovereignty policies. These policies tend to prioritize domestic companies for critical AI infrastructure.
And their search engine is dominant?
Hugely dominant. It complies with China's censorship rules, which is obviously essential there, and holds around 75% market share consistently.
A stark contrast to Google.
Absolutely. Google's cloud ambitions, Waymo's presence, they're basically non-starters in China. Stymied by U.S. export controls, Beijing's rules, even antitrust issues like that 2025 probe into Android licensing.
So Waymo has zero market share in China.
Zero. And Google's been largely a ghost there since they pulled out their search engine back in 2010. Baidu has filled that vacuum.
And they've really leaned into localization, haven't they? Tailoring their AI for the Chinese market.
That's a major strength. Their AI tools are specifically built for Mandarin, trained on local data, aligned with local norms. It fits perfectly with the government's digital China policy.
Okay, so they have this dominant position. But things are changing fast, even within China. There's new competition emerging.
Yes, heightened competition from companies like DeepSeek and, of course, their old rival Alibaba is also heavily investing in AI.
And this competition is forcing Baidu to make some pretty big strategic changes.
It seems so. This is where it gets really interesting. They're making a huge pivot. The next generation of their ERNIE large language models.
The core AI models.
Yes. They're going to be open source starting June 30th.
Open source. Wow, that's a big shift from keeping it proprietary.
It's a fundamental change. And related to that, their ERNIE bot service, the chatbot interface, is becoming entirely free to use from April 1st.
Free. They were charging for it, weren't they?
They were. For about 17 months, it cost around 50 yuan, like almost $7 US a month. Now free.
And ErnieBot has a lot of users already.
Massive base. 430 million users as of last November. Making it free could explode that even further.
So increased competition is driving them towards open source and free models. Fascinating. Let's quickly compare Baidu to Alibaba, since you mentioned them. How do they stack up, especially on AI?
Okay, quick comparison. Similarities first.
Right.
Both are huge, diversified, profitable Chinese tech giants. Both have strong cash reserves. Baidu around $11 billion, Alibaba a massive $50 billion net cash.
Both leaders in cloud in China, too.
Yep, Alibaba's number 1, Baidu's number 3 in cloud. And obviously, they both operate under the same political and regulatory landscape in China.
But the differences in their AI strategy are key, right?
Absolutely crucial. Baidu is, as we said, all in on AI. They're literally rebranding as an AI company. Their focus is intense, especially with the huge bets on autonomous driving.
Whereas Alibaba.
Alibaba's also investing heavily, don't get me wrong, but they seem to be predominantly using AI to empower their existing massive businesses, e-commerce, logistics, fintech.
So AI is an enhancer for Alibaba versus AI as the core identity for Baidu.
That's a good way to put it. Alibaba does offer direct AI services through its cloud, but its main thrust feels different. Also, Baidu makes almost all its money in China. Alibaba has a much larger global footprint in its core businesses.
So for an investor looking at these two,
It kind of boils down to this. Baidu looks like the pure AI play if you really want direct exposure to foundational models and autonomous tech within China. Alibaba is more for diversified exposure to Chinese tech, with AI being a powerful enhancement across its empire.
that makes sense. Okay, so we've covered a lot of ground here. Baidu's AI-first shift, the financials, the booming cloud business, Apollo Go's progress and unique model.
Their strong position in China, the comparison with Alibaba, and this recent, really significant shift towards open source and free AI models.
Right. We've seen how they're navigating this incredibly complex world of AI and autonomous mobility, acting not just as a player, but almost as a rule writer in their home market.
Yeah, these moves, like open sourcing ERNIE and making the bot free, are bold. Understanding this whole picture gives you, the listener, a unique view into how a major tech player balances innovation, market dominance, and profitability.
It really highlights how crucial it is to adapt strategy, especially when facing intense competition and rapidly changing regulations, like in China's tech scene.
Definitely. And it leads to a really big question, doesn't it?
Yeah, let's end with this thought for everyone listening. What is Baidu's aggressive shift towards open source and free AI, driven largely by competition, actually signal for the global AI market.
Right. Could this kick off a kind of race to the bottom on pricing for these fundamental AI services? Will other big players feel forced to follow suit?
Or is it maybe a super savvy play by Baidu to just rapidly dominate the developer ecosystem in China by making access incredibly easy?
Think about what either of those scenarios would mean for how AI tech gets developed, how it gets adopted, and crucially, how it gets monetized worldwide. It's something worth mulling over.